The Hedgeless Swordsman here. Today I'll just go over my simple case for commodities and why I like to see myself as an asset collector slash hoarder slash owner, and why I think that's the best way to think if you're ever going to be able to buy cheap and outperform the market. So first of all, commodities overall, I mean, no brainer in my opinion. We know that the best mines today, most of them were found like 10 to 100 years ago, and that goes for the big copper deposits and the big gold deposits, some of them at least. I mean, the backbones of Newmont and Barrick, they're like, the, let's say, Cortez and Carlin Trend deposits, for example. They're not finding many more of them each year, but they're mining a lot there. So the demand supply is very favorable because we take more gold out of the ground each year than we're actually finding. And with the ESG trends, it's even harder to, bring supply online. So when we have demand shocks, let's say, like we're seeing now from tin, and I think tin is all-time high. It's ramping up. The warehouse levels are very low, and you can't just find a tin mine like that. And if you even find a tin deposit, you can't flip it on just tomorrow because of ESG and the time it takes to actually prove up a 43101 resource, etc. And then you have to finance it, yada yada yada. So supply has a big lag, especially for like a commercial mine. I mean, there will be artisanal miners that can simply go out in the in the bush or whatever and start digging up some gold and lead, zinc, etc. But the big projects, they're one hard to find and takes a long time to bring online. Then every mine that is producing today will at some point in time be completely empty. And the biggest mines today, especially in copper, etc., they were found like 30 to 100 years ago. We're not finding many more of those. So the known deposits today, let's say, that are not in production, they're becoming more valuable, all else equal, with each passing year. So I like to see it as, okay, the supply picture is getting better and better, especially the supply demand picture is getting better and better. So I'm buying up something that is finite and getting scarcer basically by each passing year. So during this period of time, let's say 3 year, let's say a 6 year period, we have taken up more metals in the ground than we have found and replaced. But you can still have trading sardines like Bear Creek Mining because of dilution, etc. They're back to levels seen here and even here. But again, the demand supply picture is a lot better because this is in total, like 13 years of mining more than we're replacing. And I'm not saying to buy Bear Creek Mining, I'm just saying that the ounces that Bear Creek Mining, even if it is a trading sardine, and even if we don't know if this project will ever be built, their silver project, it still means that these deposits, all else equal, the metals they hold, are getting more valuable in terms of implied value because we're not finding enough and we're mining more than we're finding. So I like to look at it like me buying juniors. I'm buying future supply because again, they like we've seen in the M&A recently. Newcrest, Newmont, Evolution. I mean, they're starting to buy up future supply because they have to. Because their mines will run out of ore one day. Every single mine that Newmont, Barrick, Newcrest, Evolution, etc. Every single mine they have today, every tier 1 mine will run out of ore one day. So I'm simply front running that by buying, as much junior AK future supply as I can. Because they have to replace it. It's getting harder to find. ESG trends makes it harder to bring on supply. ESG makes it even harder to explore. And the market has been pretty crap overall. So capex on spending for exploration has gone down. So there's so many macro factors that are incredibly good for all commodities. I simply think that I'm not sure that we will hit the green nirvana with green metals, etc., before we have a big blow up in the world monetary and financial system. And like we've seen, I mean, 2007-8, oil and copper went to the moon basically. So everything looked good for those metals, and then 2008 happened, and oil and copper. I mean, they went down like 70+%, I think. I mean, oil went from 150, and briefly it was down to. It actually went negative on the futures market a couple years ago. And that's not something you see in gold, which is pretty remarkable because everybody thinks of gold as this volatile thing. But the base metals they typically crash even more. So if you're wrong about them, you're typically even more punished. So I simply think that even though in the very long term, I think that base metals will do perhaps better overall, I just think there might be something cataclysmic that really puts gold and silver in the forefront before that. And I mean, I can't guarantee that, obviously. I just know that the financial system is FUBAR, and something bad could happen any day now. And which is also kind of ironic is that, like in 2007, the rising commodities, etc., which we saw during the good times, during the housing bubble build-up, that also helped create the crash. So when I'm looking at oil and base metals or whatever, the way they're ramping, yes, if we could keep on this economic activity, it's gonna get even better in terms of demand supply. But the thing is that those prices, the rising prices, is also what kills the economy. So when everything looks good until it snaps the camel's back, let's say. And on the other hand, I mean, right now, especially gold juniors are so no-brainer cheap. So I mean, I can't help myself basically. And as an owner and an asset collector, you want to buy future supply down here because you might get 4 times the amount of ounces down here for your money than you get up here. But most people tragically think it's a reason to sell down here just because the junior performance have been bad and they get a lot more for their money. So they're willing to sell down here. I mean, when you think about other examples, like if apartments in your area suddenly went down like 80% in price, or even more than that, you would probably be pretty keen to buy because you could buy so much real estate for the same amount of money that you could buy at the top, let's say. So that's something I think people would actually go out and buy. But when it comes to something so esoteric like buying future supply or buying ounces in the ground, etc., for some reason we tend to not want to buy when it's really cheap and we get a lot more for our money. I mean, let's say you had 100,000 up here and you were able to buy 1% of a company, and it had like 50,000 acres or whatever, and some ounces in the ground. Down here you could buy 5% of the company for the same amount of money. Yet people are more keen to sell down here. It's pretty mind-blowing. Anyway, so and also something I would like to touch on. I mean, short-term focus. I mean, Great Bear, for example. How would you trade this? This looks quite hard to trade, and I've not seen many people, including myself, who have been very successful when it comes to betting on short-term catalysts. So here, for example, maybe the expectations were high, because they just released good drill results or whatever in Great Bear. And people were talking about, yeah, okay, the next news release is gonna be good as well. So people just kept on buying. So expectations were very high, and you were certain that the next results were good. So if everyone expecting good results, there's a lot of sellers that are gonna come because there are a bunch of short-term catalyst flippers. So when the actually, good results came, there were so many sellers because so many people had been buying front run it. So it is very hard to do, in my opinion. But if you bought here and said something like, well, I think the next 20 news releases on average are gonna be good, and you're not gonna even try to time you're not gonna try to guess which drill results will be good or which will be bad. Just think that on average, balance of probability, the base case is that in after 20 news releases, their project will be worth more than it is now when you bought. So you just sat through all these, major ramps and major crashes, etc. You would have a very good return. If you bought here and just sat through it, you would have a 15 bagger almost. But the people who were trading, try to short-term trade and guess the results of the next catalyst, I don't think many of them did well. Because they're going to be likely to buy when expectations are high, and they're probably going to be disappointed. But if you just, okay, again, looked at the signal, which would be the value creation curve, that yes, you reflect on the fact that yes, on average, the last 10 assay results news releases, let's say, the project has been growing. So if you see this as the signal, then you're going to be more likely to buy because you realize that, okay, this kind of Dixie project is a very finite resource. There are not many Great Bears around. You don't see this kind of system in a tier 1 deposit every day. So you know it's a scarce resource, and it's getting scarcer, and you know that the miners will need more of these very almost uniquely rare assets. Then you're going to be much more likely to buy, because down here you realize, wow, I can buy a tier 1 project, and I can buy, let's say it went from 9 to 3. Okay, you get 200% higher ownership with every dollar invested here than here. I mean that's incredible. You get a lot more. Your stake in one of the very scarce resources, which is a tier 1 project, goes up a lot here if you put in the same amount of money as here. So if you thought like an owner, it's like, okay, I want to buy as much of this incredibly scarce resource as I can. You're going to be licking your chops because you realize that no matter what gold does, no matter what silver does, no matter what the junior sentiment is, Mother Nature hasn't created, or the sector hasn't created many more Great Bears. So you know that this is still extremely rare. And if you have something extremely rare, you want to own as much of it as you possibly can. And that's much easier if the price of an ownership is lower. Yeah, so okay, let's continue here. Then we have, I'm just gonna go through a few stocks. Some are quite new. Northern Superior Resources is a stock I started buying quite recently. I think there are a few key value factors. The company has 3 district scale projects in tier 1 jurisdiction, Canada, Quebec and Ontario, I think. We know that, district scale projects in tier 1 jurisdictions where the geology is favorable, that's a very scarce resource right off the bat. And no matter what the price of gold is, Mother Nature isn't making more prospective ground. So you know again that the scarcity of it is unchanged, regardless of what the price of the metals do. And we know that the sector takes up more gold each year than it produces. So these projects are just going up in implied value each year. They also have a margin of safety in terms of resources. One of their projects, blue sky potential is kind of obvious because again, 3 district scale projects, they have confirmed drill hits at all projects. And I forgot to put that in, but one key driver I think is also that Michael Gentile is a major shareholder, and he's first of all very smart. He's also, I mean, he wants to make money. Let's just put it like that. So he has a big incentive to see the value of Northern Superior go up. He's not in it for a salary. So he's going to probably be pushing the company to create as much value as possible. Also, New Gold is a major shareholder, which is obviously a good sign because that's like a, a natural buyer, let's say. Their first TPK project, it's the largest gold in till anomaly in North America. So talk about smoke, okay, and it's a district scale land package. So we know again, this is unique in the sense that it's the largest gold in till anomaly in North America. That again doesn't change. So if you could buy a stake, partial ownership in this as cheap as possible, that's obviously good because you'll get a lot higher ownership percentage the lower the price of Northern Superior goes, because this doesn't change just because the price of Northern Superior changes, and this is getting scarcer every day in terms of just the fact that gold is getting scarcer, and it's a unique feature to be the largest gold in till anomaly. And they've had high grade hits. They think they've figured out a new orientation of some historic drillings, which was able to clip 25.87 grams per ton over 30 meters. True width is a lot lower at 4 meters. Anyway, I mean, they know there's high grade gold here. Who knows? This might, one day turn into something, excuse me, Dixie-like. And they have many more targets. That's just the one project, and they have the Lac Surprise and Croto Est. Good neighborhood. Again, these, prime ground in the Canadian greenstone belts. That's limited supply. That's limited supply, and especially where they're quite prospective as well, because they know there's gold here. Not that it's a guarantee that it will be a mine, but think about it. If you owned all the let's say gold projects or whatever in the entire Canadian greenstone belts, you would be sitting at, you would control a big, let's say, where the future supply is going to have to come from. So that again, this is getting scarcer and scarcer. Mother Nature doesn't make more Archean greenstone belts, so it's in finite supply. We take up more gold than we find each year. So the value of this real estate is just going up in value each year, and we're not even into the big gold bull. So imagine when gold is like, I don't know, $5,000. I mean, the value of the real estate in these prime tier 1 jurisdictions in prime ground is going to go up exponentially. So that's what I like with Northern Superior, for example. I get 3 big swaths of land in tier 1 jurisdictions to front run a gold bull when real estate prices are going to go up. And here's the margin of safety, Croto Est. They already have 640 ounces, additional unclassified. Okay, so that's not far away from 1 million ounces right off the bat in a tier 1 jurisdiction. One of 3 projects. So okay, I'm buying 3 prime projects on in a tier 1 jurisdictions. All of them have confirmed high grade gold, or at least I think like surprise more bulk mine gold. But I mean, this is you don't find a lot of this around. And again, every big mine today will run out. So the supply is gonna have to come from somewhere, and it's gonna come a lot from junior miners. So I'm just, front running by buying up the future supply as cheap as possible, and then one day, when there are even more reasons for the miners to go out and buy future supply because they're running out of ore, I'm gonna be the one selling it to them. Then we have Nevada King, and also I would just point out the fact that okay, it looks like a resistance downtrend, but we have stair step higher, higher lows, lower highs. So it looks like this could very well break to the upside. So we have a form of consolidation, and you're gonna see that in a couple of juniors. Same here at Nevada King Gold Corp. Downtrend along with obviously, the junior sentiment. So nothing company specific at all really. Gold is at pretty good prices, but that's not how markets work, especially securities, because it's like Great Bear, for example. The value of Great Bear didn't change this much, obviously. It didn't all of a sudden jump from 12.80 dollars to $28.80, let's say, in 2 months. There's no way. So the prices you see, that's bullshit. That's something you should take advantage of these swings. You should not use it as a due diligence. Oh, I guess I'm more likely to sell because the value of the company has gone down. No, the value of the company probably hasn't gone down. For all we know, the value of the company has gone like this. So of course in the case of Nevada King, for example, they put out some really good drill results recently, and so did that, and they in the news release they said, okay, this is a potential game changer. Does this look like it has priced in a potential game changer? Of course not. It's just the junior market, which is hosts the most stupid investors of all time, and that's why it's so volatile, and that's why it's on one hand so easy to beat, but on the other hand so hard to beat, because it's one of the most emotional sectors there are. So you down here, for example, down here, everybody's gonna scream sell, and they're gonna be looking for another sector to go into because this one ain't performing. So everybody's gonna scream at you that you should sell, and you're gonna be almost ashamed to even own juniors. While if you're a, let's say, value investor, you think of what you actually are buying, and looking at what you get for your money, you realize, okay, price has been going down, so even if the value was fixed, you're buying more real estate, a larger percentage of real estate, cheaper and cheaper, so you get more for your money. Anyway, a key value factor for Nevada King: size and quality of land package, jurisdiction. All their projects are in Nevada. Margin of safety. They have a resource already at Atlanta. Blue Sky, being the, I think, third largest claim holder in Nevada. Obviously Blue Sky is big because they own a big part of the Cortez Trend. Avenue for exits: they have so much prime real estate that they could, and Colin Cattell said it himself that there are different avenues for value creation, that when the gold sector gets hot again and real estate prices go up, they could JV or sell or whatever. So the idea of the company was to buy as much land as cheap as possible when nobody wants to buy it, and explore and wait for the sentiment to get better when the real estate prices are going to go up again. Uh, I mean, that's just. I mean, there are a bunch of juniors without doing anything that will go up to 300-400% just from sentiment and increasing in help of gold. So I mean, that is a valid strategy. Yeah, Nevada King, third largest active claim holder in Nevada, and I mean, just look at this is the excuse me, Battle Mountain trend, and this is the Carlin trend. This is the Getchell trend. This is very finite supply. There are not more Battle Mountain trends. There are not more Carlin trends. There are no more Getchell trends. So first of all, it's I think the top rated jurisdiction in the world. So that's extremely limited supply right from the get-go that it's in Nevada. But not everything in Nevada is prospective, obviously, because we have the Walker Lane trend down here, which has not really produced a lot of really big deposits, but it's still Nevada. So I mean, there's going to be companies that pick up some land here and say, well, we're in Nevada, but this is the really the finite supply. Regardless of where gold goes, there's only that much real estate in the prime prospective ground within the Battle Mountain trend, and they own a huge land package. So if gold goes to $10,000, there's not going to be more Battle Mountain trends created in the top one jurisdiction in the world. So this, again, extremely limited supply. I've been adding quite a bit recently because I like the fact that I could own a larger ownership interest in all these projects. And it becomes easier the cheaper it gets because I'm buying a larger ownership stake for each dollar invested. So it becomes, the lower it goes, the higher ownership I can buy of these extremely finite assets, these finite assets. Red Pine, also tier 1 jurisdiction, Wawa, Ontario, there are a bunch of mines around. Key value factors, margin of safety, they have a resource already, they have underground workings, they have a shaft, 300 meter shaft, 6 levels, established, blah blah. It's very close to the town of Wawa. So obviously, I mean, jurisdiction great, infrastructure great, sunk costs already in place, have a resource already, some quite spectacular drill results. They have a bunch of targets. District scale land package. They just added a third and a fourth drill rig. So this is gonna be, this could be a real grower. And again, Mother Nature doesn't create more highly prospective ground in tier 1 jurisdictions. So this is a very limited supply, and you don't see these results in from many juniors around. So again, these high quality juniors are sitting on extremely scarce resources, and that's why you would want to see a lower price, because you're buying up a larger ownership percentage. You personally have a larger direct ownership interest of an increasingly scarce resource, which is one gold in tier 1 jurisdiction and a high quality project. There are not that many high quality juniors around. So I mean, like an asset hoarder, let's say, I want to buy as a the largest percentage ownership I possibly can of this very, very scarce resource that gets scarcer every day. So a lot of blue sky potential, many targets, mostly underground, which is good from ESG reasons. Tier 1 jurisdiction, already has a resource, so I'm buying gold as well. And for 58.5 million, and I think they have around 11 million in cash. Ford Drill's active. Alamos Gold is, I think, the largest shareholder, which already tells you that yes, they can see themselves buying this. I think it's just incredible, the bargains. I mean, it's trading like you find these kind of projects in tier 1 jurisdictions all the time. These projects are not a scarce resource, and that's completely bullshit. Again, every major miner is gonna have to replace the supply one day, and you're not making many. Mother Nature isn't making more of these types of projects, and they're very easy to find, even though there might be more out there. So no, it's just a smorgasbord right now. Eloro resources, key value factors, margin of safety. They're on the way of doing their first maiden resource after only like 1.5 years of drilling, which is kind of bonkers. I mean, that's why I put ROI on drilling. They've yet to hit the limits of the system. No hole yet has been a completely dry hole. So I mean, think about that. With, let's say, nuggety, low gold deposits, some will miss, some will hit. You can have a lot of drill meters. Take Windfall, for example. They drilled over 1 million meters. And I think Eloro could have a 300 million ounce AG equivalent resource from, like, I don't know, 50,000 meters, something like that. So in terms of the pace of value creation, there are not many juniors like Eloro. And now with, Assay Labs being slow all over the world, we don't see the value creation yet because we don't have the results in. So that's another reason again for like buying juniors right now, because everyone is super bored with juniors because they've not been putting out the news. But that doesn't change anything from a scarcity perspective. Nothing has changed for the projects. It doesn't mean that the world creates more projects, etc. It actually means that it's taking longer to find, delineate, and drill up new projects. So this is actually gonna, make the supply, let's say, picture even more favorable, because supply will take even longer to get online and find. So as a patient investor, you're seeing that, okay, people are selling because they're getting bored. They think that the juniors aren't doing anything because they haven't seen a news release. Okay, thank you. If I can get a 30% discount on a potentially world-class project because right now labs are slow. Jesus, I mean, I'll take that any day of the week. Thank you. I just need to be a bit more patient, and I can, get a 30% discount, which might, increase my, I don't know, let's say 3-year return by 100%, simply because I have, the patience and mental awareness to understand that nothing has happened for these projects in a bad way just because the labs are slow. That's great, and they have, I mean, Eskay. It's believed it could be the only so far system that's been found in Bolivia where this entire sequence of where the system is intact, basically. I mean, talk about unique, and they believe it's a tin gold porphyry depth, and they've already hit some, very good grades in terms of tin. So I mean, talk about a scarce resource, a potentially giant polymetallic metallic deposit in Bolivia with the only of its kind that might have a almost completely preserved system and has tin. And the resource they're doing, it only covers about this area here, something like that. So this is all blue sky, and that's, in different directions as well. So this big fat anomaly, for example, they only clipped it We have no idea yet how much more there might be. And this alone could host like 300 million ounce AG equivalent plus. So I mean, talk about risk reward. Incredible project. Again, unique from the, in the sense that there are not many of these projects around, and there's not one single completely preserved system of this type that's been found yet in Bolivia. So that would be a world first. Talk about a scarce resource. And it's been getting cheaper. I think this is forming a big bull flag. So I mean, I'm basically nosebleed bullish on Eloro because I think it's just incredible. I think it should already be a lot higher, could go a lot higher still. Of course, the main argument against it is that it's in Bolivia, so it's certainly not a tier 1 jurisdiction. But I think it's more than discounted already. I think it's way over punished for being in Bolivia, because this might truly be something uniquely large and potentially uniquely rich, and it certainly looks to be uniquely preserved. But it's trading like you can find something like this, any day basically. No, this would be a world first. Total no-brainer. SK Mining. Oh, and I forgot. Let's see. Which I tend to forget as well. They have a bunch of other projects in Bolivia. So I mean, I think it's incredibly cheap based on Eskay alone. But then you get, I don't know how many projects. I don't think it says here. A bunch of projects in a pretty, virgin land, let's say, where, but in a belt where giant deposits have been found, and they also have some projects in Peru. It's just incredible the amount of stuff you're buying. If I own 1% of Eloro resources, I would directly own 1% of this giant Eskay and all the other projects here. So as an asset hoarder, thinking like an owner, I'm licking my chops when I see a declining price, because I'm buying a larger, my money allows me to buy, I have a higher purchasing power. If I just keep on spending dollar, my ownership stake goes up exponentially as it goes down, because my money allows me to buy a larger percent ownership as price declines. Total no-brainer. I would love to own everything of this. SK Mining, key value factor, size and quality of land package, unique, jurisdiction tier 1, British Columbia, possibly, well, at least top 3 hottest jurisdiction right now. Blue sky potential runway, incredible, almost uniquely large. Why do I say that? First of all, in the Golden Triangle, there's only one Golden Triangle. So ground in the Golden Triangle is a scarce resource. And what is scarcer still is to control pretty much 85% or something of the entire Eskay VMS district. There's only one Eskay Creek mine in the world. There's only one Eskay Creek VMS district in the world. If you buy shares of Eskay Mining, you're buying a percent ownership of this unique asset. 52,000 hectares of Eskay Creek VMS, the Eskay Creek VMS district. Again, there's only one of these in the world. So I like the fact that, okay, when we know that the supply demand for the commodities is getting increasingly good, and Mother Nature isn't making more of this supply, and it's not making more gold and silver, of course I would like to own as large of a percentage as I can of the only Eskay Creek VMS district in the world. Again, this is extremely finite supply, and they have a bunch of targets, and I have a direct interest in all of this. Eskay Creek right now, Eskay Mining is my largest position right now. I'm not sure if it's my, let's say, top pick, let's say, but I don't see a reason to sell. I'm just letting this run, and hopefully it will do like a great bear. There will be some batches of assets will be better than others. It will probably swing a lot, but I think the value trend is up because they have so goddamn many targets. So do I like the thought of having a for me, substantial ownership of the unique Eskay Creek VMS district, while front running a gold and silver bull? You bet your ass I do. Again, the Mother Nature doesn't create more of these. This is the only Eskay Creek district there will ever be. And when I buy SK Mining, I'm buying partial ownership in 85% of the entire district. Again, if you think like an asset hoarder, TVGF alone, for example, could be a really, really substantial system, and that's only one of many. Yes, I like the thought of me personally having a, for me, substantial stake in this uniquely scarce resource, which is the Eskay Creek VMS district. And no matter what gold and silver does, the supply of this scarce resource doesn't change. This is the only one, and I have, for me, a substantial stake in it. Yeah, okay, this was a very lengthy video. I guess the main takeaway is a few things. Think like an owner. Don't look at the share price or stocks as pieces of paper. Realize that you're actually buying partial ownership of all the assets of a company, of all the potential value, all the current known value. You're buying the labor of the people involved. When I own a part of SK Mining, for example, I'm have a direct interest in, let's say, Thomas Moneke, Quinton Henney, and John De Decker's geological expertise and value creation skills. So I mean, in a way, they're working for me. Whether or not I'm sleeping or working myself, they're out there working every day, regardless of what gold and silver is doing. And I stand to benefit. I own a percent, or not a percent, I own partial interest in whatever they create. So in one sense, they are, you as a shareholder, they're working for you. They go to work every day, they wake up and they try to create value, and you'll get partial interest in all that value created. So that, in my opinion, makes it much easier to realize that when prices are low, you get a lot more for your money. You can increase your ownership in uniquely scarce resources a lot faster by buying cheap. So I don't care if prices stay at this level, where my purchasing power is extremely high of something very scarce. I'm just gonna buy. If it goes down, I'm just gonna buy. If it goes up here, I mean, I'm getting less for my money up here, obviously. So the expected return on value money invested here is lower than down here. But now, right now, I mean, nosebleed buying, the nosebleed buying period, and take Great Bear, for example. You could have bought the tops. It wouldn't really have mattered in the end, because they just kept on creating value. Sure, this is was a worse buy, let's say, than here, obviously. I mean, the expected return from these cheap levels way higher. But as long as they create value, if you're right about the value trend, the signal, you're gonna get bailed out. Even if you have to see through 497 days of a decline in price. But if you bought, you realize that, okay, signal is, they're creating value. You're gonna be ramping up your buying here, because you realize that buying here $10,000 invested here buys you a much larger percent ownership than up here of this incredibly scarce resource, which is the Dixie project. Yeah, so again, like, don't listen to, in my opinion, don't listen to people who wants to sell when things get cheap. Look at what you're getting for your money and realize the cheaper something gets, the more bang for your buck you get from your money. Your direct ownership percentage of these very scarce resources, which is tier 1 or tier 2 projects in good jurisdictions, or well, some worse jurisdictions, is going up. And if you realize that, again, Mother Nature doesn't make more gold and silver, Mother Nature doesn't create more golden triangles or Eskay Creek mining districts, etc., you'll realize that, holy shit, I want to own as much of these scarce assets as possible, and front run the coming gold and silver and mining bull, because then the real estate prices for these scarce assets are gonna go a lot higher. Thanks for listening. Always do your own due diligence. Don't treat this as investing advice. I am sponsored by Eskay Mining, Eloro Resources, and I recently got Nevada King on board, so consider me biased. Thanks.